Hi, thanks so much for joining in. You're watching BQ Prime. My name is Alex Mathew. Joining me now is Radhika Gupta. Thank you so much, Radhika, for taking the time. And we're speaking at the Morningstar Investor Conference, and I asked the guys at Morningstar to pick out a little bit of data because we've been seeing the flows into the mutual fund industry and SIP numbers of 16,000 plus crore rupees. So I was curious about the amount of cash that equity mutual funds are sitting on. And the answer is that at the end of September, that's the data that we have available, it's as much as 90,000 crore rupees. One, what do you think about that number in the context of the overall assets? And how significant is that from the perspective of the market and the texture going forward?
So I think cash levels are one thing. In terms of market texture, I think what is actually significant is the SIP book, not the cash levels. See, cash levels in equity funds, most funds tend to be fully invested. Cash levels tend to range from 3 to 5%. I think in certain mid and small cap funds, because of the way either markets have moved or the own funds liquidity situation has panned out, cash levels may have risen to 5 to 10%, which is what you're seeing. So certainly there is some dry powder for people to invest, but I don't think at an industry level in equity funds cash levels have risen alarmingly. I think what is more exciting from the texture of the market is the fact that we get 16,000 crores of monthly flow every month. Now, in a scenario where you are seeing or have seen 3 months of foreign outflows, this is being matched or compensated by domestic inflows. I think that is very powerful. And if you look at a longer history, which is the last 2 years, where you see meaningful amount of FIIF outflows, mutual funds have matched that. So we are bringing stability to our capital markets. If I can quote a statistic, 10 years ago, DIIs owned about 10% of the equity market. Today they own 15. FIIs owned about 22. They own 20. So the match FIIs and DIIs are coming to a meeting point, and domestic capital is retail. It's a lot more stable. In some way, to quote the word of the moment, we as an industry are making our market more Atmanirbhar, and that bodes well.
And it's kind of the coming of age of an industry that has now got a sizable chunk of assets under management. What is the nature of these? Because the worry and the fear, of course, is that at some point, if things go south, and there are so many red flags that you're seeing across the globe. 2 years back, you thought that the US economy would see a downturn. They were talking about a soft landing. That hasn't happened. No landing. No landing has happened, right? Yeah. So having said that, do you think that those jitters will cause a shift in what has become a very durable flow into the mutual fund industry?
Short term, yes and no. I think long term, the trends that we're talking about are extremely structural. You mentioned a lot of assets, but I think we're 16% MFA going to GDP. The world number is now actually 80%. So we have a long distance to travel. And I think structurally, the Indian investor has moved from parking money in FD to wanting to be an equity investor to beat inflation. So I think SIP is a structural trend. I mean, it's a running joke that when you meet a common man, he says, "I don't want to do an SIP. I don't want to do a mutual fund. I want to do an SIP."
Yeah.
So it's entered popular culture. It is in that sense a structural trend. Now, is it a straight one-way up journey? I don't think so. I think in every cycle there are investors who they come at the top of the cycle when past returns are good. They experience disappointment. Some of them stay to become long-term investors. Some of them, of course, exit. The endeavor is to get them into products and to get them at a time where we can minimize this. We're just taking a step. We have a fund called an IPO fund, where we are actually saying it's going to be SIP only or restrict subscriptions to a small amount, because we know people will come in when the IPO market is burning, it's cyclical, and then they'll have a bad experience. So I think the endeavor should be to get people to come in the right way at the right time, so that the volatility of this, but the trend is structural.
Fantastic. I think on that note, we're out of time because Radhika has to rush for another interview. But thank you so much, Radhika, for taking the time. Pleasure speaking with you.
Thank you, Alex.